This is your daily real estate syndication show, and I'm your host, Whitney Sewell. Today is a highlight show that's packed with value from different guests around a specific topic. Don't forget to like and subscribe, but also go to lifebridgecapital.com where you can sign up to start investing in real estate today. I hope you enjoy the show. Our guest is Juan Vargas. Thanks for being on the show, Juan.
Hey, Whitney, it's a pleasure to be on your show, man.
Help us to think through that process of when we're first looking at properties, getting to the closing table, and then let's go specifically after closing as well. When that's your role, what should we be doing?
Yeah. So I would say, my first couple of deals were, I actually got into the GP side by assisting with the equity. Right. So I was, equity, right? So I just want to clarify that up front. So there's multiple ways to get into the GP side. I do want to say, so, just figure out what your skill set is. And sometimes you don't know what that is, but you'll learn it, right? You'll learn what you're good at and what you're not good at. And so my entry, into GP side was through capital, right? Raising capital. So that's one of the ways, but my focus now is on asset management. So you pretty much, asked me, what's kind of like the role, what you do. So, first of all, as far as, finding the opportunity, you got to find the opportunity. You find the opportunity, you get it under contract, right? What we've been able to do, on some of our deals is actually build in a early access agreement or early access period into the contract. And so what that has been able to help us to do is we're actually able to go in there and, 7 days, we're actually able to go in there and do a lot of the due diligence within those first 7 days before, if you have hard money, before your hard money goes hard, day 8 or whatever that is. That's the way we've been able to structure our agreements. And so during those 7 days, you want to, have access to the property. You want to be able to go into the property and go into the units, take a team with you, so have roofers, electricians, plumbers, all those kind of guys. Your property management team can also help you out with doing their lease audits, doing their own survey, and also getting, some of the budget and the pro forma put together and buttoned down. So that's kind of what we do, just to help us eliminate some of that risk up front, and if it's something that we find out that is not worth going or moving forward with, then it's easy. We just walk away and hey, it didn't work out at the end. If it does, then we're able to move forward and, our money goes hard, day 8. So that's kind of the way we started, right?
I think that's some great advice right there. I mean, and I haven't really heard anybody elaborate on that like that or talk about, building in the early access. And I've heard people in the industry maybe mention or talk about it, but not on the show. And so that's great advice. And would you say, do you have that in your LOI or is that something that's in the contract?
Yeah. So you want to make sure that you put it in the LOI so like that whenever you go to finalize the PSA, the seller knows what you were expecting, right? So, every time we're submitting an LOI, we always make sure that we have that early access in there, and so it can vary. We do it for 7 days because a lot of times the seller doesn't want to give you that, right? They're like, why would I allow this guy to be on my property and going through my units and do all this, their own homework, and then they're not really 100% committed at that point, right? So what we do is we put that in there, but we go ahead and wire the money as if we're going to go ahead and pursue it, right? As if we're going to, for sure, take down this deal. So wire the money. It doesn't go hard though until day 8. But we make sure that we have our attorney put in there, hey, if we don't feel comfortable with it, we can walk away, and the hard money that's with the title company can be returned to us. So we got to make sure that we do that because a lot of these deals these days, the reality is that you have to go hard money, and if you're not going hard, then you're not winning anything, and so a lot of people they don't want to go hard, so you're not winning deals. That's part of the terms, So the price I think is the most important, but the terms are right there with it, and then is your track record, who you are, and all that good stuff. So, and so we always try to make sure that we every time we submit an offer, we got to make sure that we have that in there,
Now I know you just saved somebody $200,000 right there. Thanks for talking about that. Because it is very important. I love that tip that you put out there, and getting that time agreed upon that you can do an inspection, and hopefully the sellers cooperate, right? And let you in and provide access and those things. And so you're not one to waste your time either, right? I mean, it's costing a lot of time and money for you to come do that early due diligence like that. So, but tell me about that team though that you have ready, to to come in with you, because you want them there, right? You want them coming in those units and giving you some really solid advice on what needs to be done, right? What are we going to have to do going forward, and what's the cost going to be? And so, who's that team, and what are their roles?
Yeah. So, before you're able to do that, hopefully you were able to get like an operating budget to do your pro forma, and see if the numbers work out on the deal, first of all. And usually that's a property manager, right? So reach out to a property manager, somebody that's well known, somebody that manages properties that are similar to the property that you want to acquire. So if you're looking at a C deal, then they'll look for a manager, right? They're going to be useless for you, right? Vice versa. If you're looking at a B plus deal, don't look for a manager that does C deals, right? You got to find somebody that fits exactly what the kind of product that you're looking for. I think it's very, very important. A lot of people, they see managers as somebody that can manage a property regardless of what kind of property you have. And I don't think so. I think, there's C managers, and there's managers that focus, and that's their strength, that's their bread and butter. And then there's B managers, and that's their bread and butter. Yes, some of those may interchange. It might do B and C, but they're going to focus on one asset class versus the other more, right? So that's what we do, right? So we try to find that manager that kind of fits, and we look at the portfolio, we interview them, we do all that good stuff, and then we tell them, hey, we're about to get this property under contract. We have this with LOI that's about to be accepted, or whatever. Those kind of things, just to prepare them and have them ready. And then so apart from that, because they're usually going to handle like your lease audits, they're going to be on site, they're going to be doing a lot of that, right? But you still need somebody to go in there and check out your roof, and then check out your plumbing, your electrical, your units. Your units is usually going to be your manager, but you still want a team to go in there and do all that, right? So, and all that is going to cost you. So that's, you're still going to have to put some money in, and it's going to cost you. If you walk away from the deal, you're still going to have spent, some of that money. And if you don't pay for, if you don't move forward with the property, then you still have to pay your property manager for their due diligence costs. Usually they'll take care of it, and will do it for free if you move forward with the property, and if you are to use them, if not, then you have to write a check, for their services. It's not for free either, So those are the people that you want to have really on the property ready to go. As soon as you sign that, then, bring them on and have them ready.
I want us to jump to, closing, after closing, maybe some things that, as you're managing these properties after closing, things that we should be thinking about, that we are doing, even on a monthly or weekly basis, those meetings we should be having, things we should be discussing.
Yeah. So we always have weekly calls with our managers. We don't self-manage our properties. We have third-party property management companies that manage the properties for us. And we want to make sure that we have calls every single week, because, you got to look over the, all the numbers. You got to look over the KPIs, the numbers, what's going on with the property. What are we doing? What are we renovating? Why are we not doing this? What's working? What's not working? Right. So, every Tuesday is kind of when we do our calls, and that works out best for us. Right. So, and during those calls, you want to, like, as I said, talk about the reports, right? Talk about the number of units that you renovated. How much were we able to get? What did it cost us? Because a lot of it is testing. It's, whenever you put your performer out there, you're assuming that if you do these kind of repairs or renovations, you're going to get this kind of rent. But whenever you actually do the renovations, that's not always the case. It can be worse or it can be better, right? For us, fortunately, it's been better. And maybe the economy, maybe the opportunity that we found, but it's been better with less capital that we actually put into these units. So, those are the kind of things you want to do. As far as, leads, that's very important, because, is a lot of it is lead retention, your tenant retention. You got to try to make sure that you keep your tenants, because that costs you a lot of money whenever you do turnover. When you have a turnover, that's a lot of money wasted, because then now you got to market the new people, the unit sitting vacant, those kind of things. So it's very important that, you keep track on what's going on with your existing tenants, and then your new tenants, where are they coming from? What's the traffic look like? Did we close on this lead or not? So those are the kind of calls, and those are the kind of things that you have to discuss on these calls, apart from being at the property, right? So you got to go be at the property, as much as you can. If you're local, then that's good. You could be there, once every couple of weeks or something like that, right? You don't have to be there every single week either. But if you're not local, you want to be there at least, once or twice a month. And if you have a team, maybe you could take turns, and everybody kind of be there once a month or something like that, right? So you always got to stay on top of that, because the truth is they're not going to be watching over your property unless they know that you are serious about it, and they know that you're on top of them. Otherwise, they're going to take it easy.
Awesome. So some great things there that we need to be talking to our property management company about, right? And you said you all are doing it on a weekly basis, which is great. Anything else that might come up during that call that you need to address at that time? Anything else they might bring to you that, maybe somebody that's not doing this yet may not realize that they're going to have to talk about or be prepared for?
Yeah. So one of the things, and I'm going to give this credit to Neil Bawa, and for a lot of your listeners, I'm sure they know who he is. So I listened to a podcast that he was on, and he spoke about this. So he spoke about hiring, some VAs to help with lead generation, right? So your property manager is going to do their best job. This is his words, and I'm not it's not quote for a quote, but the property manager is going to do their best job to get people on to your property. But the reality is that it's only going to be a handful of people, right? So it's only going to be one or two people, or maybe three at the most, depending on the size of the property, that are going to be doing that. And so he hires VAs from the Philippines to do calls, to create leads, to bring them to the property. Now, he's not replacing the manager at all, but he's assisting, and so he pretty much is doubling down. And so he's bringing leads from the manager, bringing leads from his VAs, and is working together. And those are the kind of things that these days, you have to find out every single opportunity that you can find, because the reality is that a lot of these properties are overpriced. And so if you're going to pay a little bit more, then maybe you think it is worth. You want to get into a property. I'm not saying to overpay, but the reality is a lot of people are overpaying. You got to find out every single opportunity that you can do to the property to create those revenue streams. Because that goes to the bottom line, right? So I'm gonna give him all the credit in the world, because I heard that from him. And I thought that was just genius, man. That guy he's very, really intelligent and smart, and the way he manages his properties. So I took that page from his book, 100% from his book. So I thought that was very clever.
Our guest is Mike Vann. Thanks for being on the show, Mike.
Hey, Whitney. Thanks for having me. I appreciate it. Glad to be here.
Tell me a little about your syndication journey. What was the deal you all did recently? I know your partner we've had on the show. We discussed the deal, but I'd like for us to talk about that deal and and maybe give us an update as well. But in case the listeners don't know, maybe give them a little more background on that property. My
partner Rodney Miller had been on the show prior, and I think we were just getting ready to close, or maybe had just closed on the deal at that time. This is a 100-unit C-class property in a market just east of Tulsa, Oklahoma, a place I never would have imagined me buying an apartment complex in Pryor, Oklahoma. Very small town. But the key factor that was one of the decision makers in us pursuing the deal was this is home to one of Google's server farms. They had come in 2011, I believe it was, and have since invested over $2 billion in this community and have continued to expand their facilities, have purchased and built on to their existing facilities, purchased other facilities, built more, keep adding jobs. And the market there just aren't enough places to live. And so everything there is pretty much within 20 miles of there is full. So there's not enough places to live. We saw, the fact that Google came in at the end of last year, even announced a several $100 million expansion on this facility specifically. And then later in the year, before they can even start this, announce a further expansion. And so, there's going to be jobs coming in this community for years to come. And Google's not a standalone. I mean, even though we know Google's not going to go anywhere, there's 5 Fortune 500 companies in this Mid-American Industrial Park there. And so it's a diverse economy with a lot of jobs there and planned to be coming in the near future over the next several years. And so that combined with the fact that the demand for housing there led us to go ahead and pull the trigger on the deal.
I appreciate you mentioning just having a diversified job selection. Mm-hmm. Obviously we feel like Google's going to be around for a while, but still, I wouldn't feel comfortable if that was pretty much the only main employer, that there wasn't any other large employers as well.
Right.
But obviously that they're building on, that's a great sign. So tell me, why did the sellers sell the property?
It's interesting. It was actually Mitt Romney's son is who we bought the property from. And they are kind of focusing more out in Utah area in disposing of their assets outside of that area. In general vicinity, and they had sold some other properties in Wichita and some other areas here in the Midwest, and we're just kind of focusing closer to home.
Okay, so and just so the listeners know, Rodney's show was show WS 199. In case you want to go back and hear more about the property when they were in that process of closing. I can't remember the exact process if you all had closed yet or not, but you're close.
Right.
I think. And so, let's talk about what's happened, since close and, some things maybe that's happened that were unexpected and what's happened, since then.
Yeah.
But so since close, what kind of a game plan or, did you all put in place?
Well, the property was full, fairly full when we took it over, like 97%, something like that. But one of the things that we didn't really uncover was how many short-term renters were there. We did our lease audit and all that, and we knew that there were a certain amount of short-term renters, but there ended up being a lot more than were actually shown clearly on some of the leases. And upon takeover, the day of takeover, when we did our unit walk, there were actually some people that I guess had moved out that hadn't been moved out on, were there on paper, but not there physically. So we had a little bit lower physical occupancy when we came onto the property, which is not a big deal. We put our team in place and went to work. And then over time, we came to find out that the local manager that they had there in place didn't have a lot of rules. And people just, decided they were done with their lease and no notice and just moved out. And so I guess the thing I would learn from that is you can look at the lease files on paper and do your due diligence on that, but maybe ask better questions, more questions to get a better, clearer picture of what the true tenant profile is like. And so just be able to anticipate it a little bit more. I mean, it hasn't really hurt us financially. I mean, like I said, we were able to turn right around and get those units re-rented, but because of the demand, we're already rented several units at our pro forma rents, which were quite a bit higher than the previous owner had in there. We basically got them up to market. And
I was going to say, if there was that much demand, it may have been a blessing that those people moved out.
Absolutely. Got some of the less desirable tenants out and moved out in.
So what kind of questions should we be asking so that doesn't happen to us?
Maybe tenant concentrations with a lot of the construction that was going on there because of Google. A lot of the Google 1099 workers or the Google folks that were coming in just on short-term contracts. Maybe ask, like I said, tenant concentration, their specific policies on notices, move-out notices. Typically we have a 30-day notice. Well, there was no 30-day notice, or it wasn't being enforced. It was actually in the lease, but wasn't being enforced. So definitely want to know your tenant profile, concentration of employers within your tenant profile, and be able to anticipate those types of problems. And not that you can really do anything about it because they're already there, but at least it lets you get a game plan around that when they do move out.
So was the seller self-managing, or was it a third-party management?
It was a third-party manager. Basically, they just found some guy in the local community and had him come in and run it like
however he thought he should.
Yeah, he was a guy, very stern guy. He was kind of a fair housing nightmare, really. So we obviously didn't keep him on. But yeah, it was a third-party management company. I don't think there was a lot of oversight. I mean, these folks were other side of the country. This is a very small asset for them. And, they admittedly said it was kind of ignored somewhat. And they just kind of prettied it up a little bit before they disposed of it. But hey, it's going to turn out to be a great asset for us.
Good. Tell me what's happened since close outside of, I know you've got rid of the old manager and I'm sure you've got a new manager now. And what was the game plan with this property? Is it a value add? Is it, remodeling units or just getting better tenants? What did you all have to do to increase the value?
It was more, sorry to interrupt you there, but it was more just going in. There were very few rehab units. Probably 90% of them had already had full to partial rehab, so there wasn't a lot of capex to be done. Some a little deferred maintenance on the exterior, stripe and seal the parking lot. That's actually being done today, and new landscaping, rebranding the property. We're going to add or extend the laundry facilities, make it a lot larger, put more grilling stations around the community, and start holding. We just held our first resident event the other night, a barbecue. Doing more of those to create more community there among the residents so we can get better tenants and keep them longer.
Thank you for being a loyal listener of the show. Please subscribe and share it with your friends. We want to help you become the passive investor you've always wanted to become, but also the operator you've always wanted to become. We want to be the #1 resource for your real estate investing journey. But go to lifebridgecapital.com where you can start investing in real estate today.